Hello everyone, in today's video I will talk about a new trading strategy using the awesome oscillator developed by Bill Williams with the relative strength index. This combines the power of measuring momentum with the awesome oscillator indicator and overbought or oversold conditions with the relative strength index. If you are new on the channel, please subscribe to the channel, hit the like button and also feel free to leave your comment down below. The awesome oscillator may be new to some traders, so here is a brief outline of this trading indicator. What is the awesome oscillator and how does it work? Well, Bill Williams' usage was to measure the momentum in the Forex market, or any market, by using a combination of 34-period simple moving average of the median of the previous 34 candlesticks, 5-period simple moving average of the median of the previous 5 candlesticks, zero line plus histogram. 1. When the awesome oscillator is below the zero line, we can determine that the short-term moving average, 5-period simple moving average of median price, is lower than the 34-period moving average. This is a downtrend. 2. When the awesome oscillator is above the zero line, we can determine the trend is now an uptrend. 3. When the histogram is rising green, we can determine that the awesome oscillator value of this candlestick is higher than the previous. 4. When the histogram is falling red, the value of the awesome oscillator is less than the previous candlestick. While some traders may present these are buying or selling signals, they more accurately present an opportunity and not a signal to buy or sell at that moment. We can also use an awesome oscillator term called a twin peak, which can show divergence in the Forex pair you are trading. You can see this currency pair make a lower low on the right, but the awesome oscillator is making a higher peak. The key is that the area between the two peaks remains above or below the zero line depending on location of the peaks. In this case of this chart, we need the histogram between the peaks to remain below the zero line. For this trading strategy, we are going to combine the awesome oscillator's ability to help determine momentum with the relative strength index overbought, oversold condition to produce a trading strategy. This is a form of technical analysis and we will use price action to trigger us into a trade. We can day trade, swing trade, and even position trade these setups. Your time frame will depend on how much time you can devote to trading. Regardless of your approach, ensure a stop loss is used and that risk management is considered before taking any trading signal. Now that you've understood the background, let's get straight into actual rules of how to trade the relative strength index with awesome oscillator. Selling rules. Step number 1. The 14-period relative strength index must be above the 70 level or in overbought conditions. Step number 2. Wait for the relative strength index to start heading below the 70 level and see if the awesome oscillator is showing us a red histogram bar. Step number 3. If the awesome oscillator is showing red, we look to place sell order in the current candlestick. Buying rules. Step number 1. The relative strength index must be below the 30 level or in oversold conditions. Step number 2. Wait for the relative strength index to start heading above 30 level and see if the awesome oscillator showing us a green bar. Step number 3. If the awesome oscillator is showing green histogram bar, we look to place a buy order in the current candlestick. There may be times where the cross of the relative strength index is followed 1 to 2 candlesticks later with a turn of the awesome oscillator color. A trader may consider that still valid, however, a trading plan may have a limit on the number of candlesticks that it takes to turn the awesome oscillator. Also note that we are not concerned with the zero line cross, although you may wish to use the histogram crossing zero as a time to add to your position. If you recall, a zero line cross indicates a trend change and it is possible that by using the relative strength index, you are picking up an oversold, overbought Forex pair and catching a trend reversal. Stop loss and profit targets. Stop loss is essential to your longevity as a Forex trader. There are many ways to set a stop loss and you may consider using the swing high-low that precedes the trading setup as one. Just ensure you are not setting your stop right below swing lows or above swing highs. Those are places of liquidity and I personally use those zones as failure test trades. You will be getting taken out of your position at the time you should be entering. Profit targets can be set as a multiple of your risk, or for a more trend-following approach, hold your position until the zero line of the awesome oscillator is crossed in the opposite direction of your trade. Picking tops and bottoms is rare, but it can be done at times. Perhaps even consider getting out with an oversold, overbought condition, however the markets can stay in that condition for quite a while. It does not mean the trend is reversing. Thanks for watching. Please don't forget to like the video and subscribe to the channel. I'll catch you in the next video.